Welcome to the SNN.Network Canada virtual event. I'd like to introduce our next presenter, Dan Matlow, President and CEO of VitalHub. Dan, the floor is yours.
Good morning, everybody. I guess it still is morning in Toronto, Canada. Welcome to a presentation and for some of you an update on VitalHub. Just a bit of introduction. I'm Dan Matlow, the CEO and founder of VitalHub, and just for those that aren't familiar with myself, a little bit of my experience is about 30 years in the software business, of 25 of those in the healthcare IT software. So I like to think me and the rest of our management team are very proficient in the software industry as it relates to healthcare IT software based businesses. So prior to this, we were involved with many venture capital-based companies that grew nicely in the healthcare IT company, and prior to VitalHub, founded a company called MedWorks, was publicly traded since 2008. So we've been on the public market since 2008, are very familiar with how things work. MedWorks was sold off to private equity, a Vista Equity partner-based organization. For those that are familiar with Vista Equity, probably one of the most prominent private equity-based groups out of the U.S. So, and then we started VitalHub shortly thereafter in 2016. Again, just to reader's advisory for those that need to read it. So just a little bit of who we are as a company. Again, we are focused in the health and human sciences digital solutions. I just want to reiterate, and we'll reiterate this a bunch of times, we are a 100% software-based organization. We do not own any clinical delivery organizations, clinical-based organizations, physician practices at all. We are 100% a healthcare software-based organization that is really highly focused on high-margin-based software and recurring revenue-based services. We are growing both organically. The company has seen about 25% organic growth in the last year, and we define organic growth for those solutions that we sell that are other than what we bought. So we are also a consolidator through M&A growth. We've completed 11 acquisitions to date, and we'll continue to do that on a go-forward basis. So M&A is an important part of what we do, but we're strategically buying M&A assets that we think fit nicely into our narrative, that we can have great communication with our customers and those senior execs in terms of us becoming a trusted advisor to those based organizations. We are focused on a very large, addressable, fragmented base market. So we like the target market that we have for our solutions. To date, we've been focused on government-based funded organizations, not just in Canada. We are internationally based. In fact, we are doing more outside of Canada. Canada is still a significant amount of our revenue, but we are doing more outside of Canada in terms of revenue, and we'll always do more outside of Canada from a revenue perspective, with a big emphasis in the UK, European, Mideast, and Australian-based marketplaces. So the company's focused on organic growth, targeted with M&A. We're in a very strong financial position, and we think we've taken a little while to get here, but our annual recurring revenue keeps growing. It's well north of 21 million of recurring revenue, and the company is north of 28 million in overall revenue. It's adjusted EBITDA positive. We focus on adjusted EBITDA because of the acquisitions. We have a lot of non-cash items that are on our balance sheet. ARR, or recurring revenue, is an important metric. Again, well over 21 million. Our customers are long-term, high-quality customers, big customer agencies or hospitals or groups of hospitals. Most of our products are sold on a SaaS-based, recurring revenue-based model, and our board of directors and our management is very strong. So as I said, we're always targeting synergistic assets that we think will flow together pretty nicely. We're focused on two primary areas in what we call patient flow and operational visibility, as well as with case management and mental health-based solutions, and I'll explain those in a minute. We also have our own offshore R&D based group. So we're about a 220 plus people organization as it sits today. Of 70 of those are based in Colombo, Sri Lanka, which allows us to build pretty innovative solutions at a pretty cost-effective based world. So we have our own R&D strategy as offshore. We don't contract that out. It's a 100% owned subsidiary of VitalHub. We do international sales, as I said, across Canada, some in the U.S., but a big emphasis in the U.K. Marketplace, Canada, Australia, European, and the Mideast are markets that we're all in. So what do we do? As I said before, we have two main areas that we're looking for acquisitions and where we build and we enhance solutions for. So we are looking for solutions which we call operational visibility and patient flow. This is it's 70% of our company's revenue today, and is a very dominant area of interest for healthcare today. So any solutions that help the patient and view the patient as inventory that will help the hospitals or the healthcare organization help them flow through our organizations more effectively. So how do we get more performance out of our ability to see more patients, treat more patients, and have those patients easily come into our organization? So we have about 30, 40 different products in that particular suite. And we define those two areas of products in two areas. One is operational visibility solutions. Those are things, if you walk in the hospital, you see boards on the walls, or boards in the patient's room, or boards in the emergency room, or very often they're command centers. They'd also come through on the executive's phone. They provide high-value analytics, artificial intelligence-based solutions that help healthcare professionals understand where their capacities, how patients are moving, and how can we do that more effectively and see more patients. So we have about 20 different products that we've built and acquired in that area. And the other area is what we call patient journey solutions. Those are solutions that help patients themselves. So the patients would actually use those applications as they need to navigate through the health system. So the ability at home to do a preoperative based assessment before you come in for elective surgery, the ability to see an appointment before you come in for a outpatient-based service, a kiosk that you would register for in a hospital-based setting, tools that help you navigate through the hospital to get to your preoperative-based solution, your session. All those are evidence of tools that we have in patient journey solutions. And the other area they have is on the EHR, what we call case management, care coordination-based market. That's about 30% of our revenue. And this is primarily based just in the Canadian marketplace, but we've established a platform which we call Treat, which is the most predominant based platform for community agencies and mental health. And we've won some very large transactions, provincial and regional, and we expect to keep continuing to win more of that as it becomes the most predominant based solution in that particular market in the Canadian marketplace with Treat. So just a bit of highlights, as I said before, about over 21 million of ARR. There's zero debt in the company. Our shareholder base is primarily institutional based. We have some very influential institutions that are very happy with us. We're sitting with 16 million of cash on hand. We are producing cash, and over the last 12 months, we've done 30% of organic growth. We've been adjusted to EBITDA positive for the last 9 consecutive quarters, and our gross profit margin is over 75%, again, based on our ability that we're about 80% of our revenue is recurring in nature. The management myself, I think, is led by myself. I think we described that. Brian Goffenberg's our CFO, been around for about 30-plus years in the industry. Mike, who heads up our UK group, 20-plus years of healthcare IT. Robert and Vijay are heads of services and development, 30 years in healthcare IT. And Neil's talking 20-plus years of healthcare IT software. So a very strong group that we've put together. The board is myself. We are also supported by Francis and Tony Shen, which are also one of our bigger shareholders. They're the founders of Aster Technologies, which is a great success story on the TSX years and grew through M&A. Chris and Roger have lots of experience on Bay Street in terms of the public markets. Barry heads up our audit committee, former senior partner at Ernst & Young. And Steve Garrington is our healthcare IT executive, held many senior roles for a company called InterSystem in ISOFT, which is now DXG, where he was a second in command of those organizations. That was a very large internationally based organization. We just uplisted to the TSX. Again, another milestone that we're happy to do that. It was something that was important for us to do in terms of graduate, but again, evidence of things that we can get accomplished. A little bit of the history. I'll go through this very quickly just based on the time, but we started off in 2016 with VitalHub, become private co that went into the public markets and immediately bought organizations in the EHR case management area. Hynex was a very key acquisition in that got us our Treat platform. So all the other products have been rolled into the Treat platform. That is the only product that we said. So in that marketplace, we've done a very good job of integrating those platforms into one platform that we have. B Sharp is where we inherited our offshore development group, and that's where we've continued to grow out of Sri Lanka, and that's where the genesis of that started. At the end of 2019, we sold our first large regional contract with the government of Nova Scotia, which is still ongoing. We expect that project to be $2.5 million worth of recurring. At this stage, we're recognizing about $400,000 or $500,000 of recurring revenue from that particular contract, but we do expect it to continue to grow. In 2019, we entered into the patient flow arena. Most of our efforts has been in the UK marketplace with those solutions, and we're bringing those solutions into Canada where it's appropriate in the other markets. Outside of Oculus, which is a Canadian-based organization, which is a leader in operation and visibility solutions, Oak Group, InTouch, JX, and Alamac are solutions that in Transforming are all based in the UK. In particular, InTouch and Transforming, InTouch is where our patient journey solutions derive out of, and Transforming is where we get regional operational visibilities. And those are the two areas where we've seen a lot of our organic growth that's really come out of those areas. JX is a competitor to InTouch, so we took out the competitor in the UK-based market. And F12 was our entry into the mental health case management platform in the UK marketplace that we did that acquisition for. So we have been active in the UK marketplace and a lot of activity that we've gone on there. Again, as I mentioned, Treat is the leading product in the mental health community agency space. It has been doing very well in requests for proposals in the last little while. We're expecting to make significant announcements over the next year or so in this particular product set, but it's the product that we sold at Nova Scotia a couple of years ago, and through that project, the project has been very enhanced on a go-forward basis. So we've seen some pretty great solutions, and we've rolled everything into that particular branding. Again, the patient flow and operation ability space, again, focused on the patient operational journey-based software with InTouch Synopsis, which is a division of InTouch, and that's where we things like our preoperative-based assessments before you come in for surgery, which has done very well in the UK, and now we're bringing it to the Canadian marketplace. Appointments before you come into preoperative-based assessments, before you come into that particular world. All the outpatient-based work when you go into a hospital, all that flow is all done there. InTouch is installed in about 60% of the UK marketplace and continues to grow. It also has implementations throughout the Mideast in Australia, and we've really beefed up the approach in the Australian market with that particular product set. And on the operational visibility space, Oculus is a Canadian-based version of dashboards and views for hospitals that we have. Transforming System is a regional view so that regions can see where their bottlenecks are, not just from one hospital, but groups of hospitals, groups of long-term care homes, group of community agency stuff, so that we can see on a real-time basis those solutions that would be in that area. Again, patient flow outcomes do a lot of different things, but really we're trying to maximize the patient throughput through the entire system. We're looking at things like demand and capacity. We're trying to optimize solutions and optimization of healthcare of the flow. We want to look at those things from a whole system visibility perspective. We do a lot of emphasis in the operative-based world, the surgery-based world. That's where there's a lot of flow issues that would come through there. We do that using virtual consultations, and we're always looking at patient activity. and how they work through that patient flow. A very big growth market that are there, and we're just listing on the next slide some of the solutions that we have in that area, things like mobile appointment management, virtual clinics, iReceptionist, so we get receptionists on our phones before we come into hospitals now. We're really trying to capitalize on the triangulation between mobile-based solutions, web-based outcomes, virtual care that really are coming together in those solutions. In the operation of visibility, you can see some of the boards. When you walk into hospitals, they would use those visibility boards, those command centers, to help them understand and predict flow throughout their organization. So we're looking at that for elective surgery. We're looking at it by divisions, units. We're trying to allocate beds, and we're doing a whole bunch of different AI solutions that are there. Just like to talk, the target marketplace is very big. The current company has products installed in about 50,000 beds. We look at hospitals by size, by the amount of beds that they're licensed for. So if you look at Canada, Europe, Mideast, and Australia, there's about a 3 million bed marketplace. We're installed in 50,000 of those 3 million. And of those 50,000, we still have lots of room to cross-sell our solutions into those bases. A little bit on the M&A strategy. Again, we think we're good capital allocators as well as operational people. But again, we're looking for M&As where we can get synergistic value. We really look at reducing R&D spend by using our offshore development group. We consolidate our G&A. We cross-sell our products very effectively, which is a big reason we have our good organic growth. We optimize sales and marketing from a central location, and we are very focused on organic growth as well as making acquisitions. We look for companies. We have about 400 companies in our database. We look for cost reduction by 20% out of the get-go. We've been buying companies in 1 in 12 million of revenues, never less than 60% of that being recurring in nature to do that. The company is really focused on getting a adjusted EBITDA or EBITDA margin of 20 to 30%. We've been using a combination of cash and stock for our acquisitions. Early days was more stock, later more cash. Let's go there. We do like the ability to use a little bit of stock in our acquisitions to keep the companies we're buying and the principals whole and have them become a part of us when necessary. We've been buying companies in 1 and 2.5 times revenue to date, and never more than 3 times recurring that we paid for an acquisition at this stage. So we always believe they're accretive out of the get-go. Our profile is, again, recurring revenue. The company's 80% recurring, so we will not buy things that won't have recurring revenue. They tend to be break-even or profitable, that we can get much more profitable. They've had limited outside investment from the get-go, significant customer bases with no retention issues, and we need the ability to cross borders and upsell those products. A little bit on the company's financials. As you can see in the last 12 quarters, the company has grown pretty nicely on a recurring revenue and a revenue basis. So you can see the organic revenue that's grown throughout the years through that particular company, and we continue to see those trends improve. Over the last 12 quarters, this is just a slide that's been showing our organic revenue versus our acquisition revenue. Again, as you can see, our organic revenue continues to grow. We are not just a company that will buy M&A. We like to buy recurring revenue streams, but we really want to turn that into some organic revenue. Again, over the last 12 quarters, you can see the mix of our licenses. And as you can see, recurring revenue is the big basis of what we have, with about 80% of our revenue coming from recurring in nature. We do have through term licenses and those things. We do some elements of perpetual licenses, but it gets less as we continue to progress, but we are producing in those areas. Historical performance, you can see over the last, as we've seen, the continuous trend in the last year. Our adjusted EBITDA continues to grow. Our margins continue to grow in terms of where it is. So we continue to work on that particular area and expect to get that. We want to be, and are very well there at the point, a company of 40. So we want 20% adjusted EBITDA or EBITDA. We use adjusted EBITDA only because of the non-cash items on our balance sheet, but it is a pretty good reflection of our cash flow. and we're looking for 20% organic growth, both on ARR and actual growth in terms of revenue that we're doing that. And so far, the last quarters, I think we had 19% adjusted EBITDA last quarter, and we've been producing consistently over that 20% mark on the organic growth side. And as you can see, revenues, the percentage of adjusted EBITDA, as the slide would demonstrate. And the last trunk quarter of ARR, you can see our recurring revenue that's continued to grow. We're getting $21.5 million as announced. We haven't announced, we continue to produce in Q4, and we are still sitting on a significant amount of cash for our ability to move forward to do more acquisitions, as I mentioned before. Shareholder summary, as you can see, there's about 37 million shares outstanding, a limited amount of options, a little amount of warrants that are still outstanding. The warrants are primarily at $3.90 that are held by the Shen Investment Group that came in earlier. But again, the stock is trading about $3.30, I think, today. We're sitting on over 16 million of cash with very little debt in the company, and we're in a position, I think, to do very well. So it's still trading on a relative valuation, just over about $100 to $120 million market cap. But as I said, the company's doing 22 million of recurring revenue and 28 to 30 million of real revenue that goes along with it. We are covered by some analysts, 5 analysts that have a range of between 425 to 535 between Comark, 8 Capital, Beacon, as well as Paradigm and Canaccord, and they've all been very helpful with us. Again, I announced the Nova Scotia deal a little while back. This is something that we expect to get another $2 million worth of recurring revenue organically through 2022, 23, and 24. It's already at about 500,000, but we also think this will lead to more provincial deals, and we're starting to see regional-based activity on our chief platform. So we just wanted to highlight that deal. In summary, it's a big market, lots of acquisitions, lots of ability to grow. We're in a pretty, we think, evident area, very high-profile area with patient flow and operational visibility. It's a niche area, but lots of opportunities to make M&A. We've done 11 acquisitions that we've done. I think we've done very well on in terms of accretive NIT-based visions that we've had for that. Strong ARR, management team that's highly experienced in software, healthcare, IT. Again, I want to mention, I think the reason our stock has continued to perform well of others, we've never represented ourselves as being an organization that does delivery or clinics. All of our products are 100% healthcare IT software focused on government areas. And we also have our offshore development group as well. And I'll open it up for any questions, and if Corey can help me with that, that'd be great.
Thank you, Dan. Our first question asks if you could speak a little bit to the U.S. market and if there is an opportunity for VitalHub there.
Yeah, we will eventually go to the U.S. market. Our management team has extensive experience in selling in the U.S. marketplace, and we purposely haven't got there because we do think there's a void of solutions in the government-funded areas, and our target market between UK, Europe, and Australia is more than big enough for us to get to the size that we require. And that's an area where we're not seeing U.S. companies going into. So it is wide open. We are basically replicating some activity that's already going on in the U.S., and that's why we know this will work. We have experiences. We've seen companies grow in the patient flow arena in the U.S. marketplace, and we think there's a void for an aggregator to keep buying those solutions in our marketplace. As we've accumulated some good assets, which we have already, and we get more, we will start making some entries into the U.S., both on the M&A side and there, but we wanted to get a strong base first.
Thank you. Our next question asks, how do you service the outpatient population?
We service the outpatient population through the outpatient services. So when you come in for a procedure on an outpatient basis into a hospital-based setting, we have lots of those solutions that will help you. So imagine you get referred in for a fracture clinic because you've gone to your doctor or you've you went to the emergency room, and then they said for a follow-up appointment into the fracture clinic. We will do things like tell you when your appointment is, arrange for your appointment, have your images on your app for you when you go in for your appointment. When you get to the hospital, we will notify you on your phone to check into the hospital prior to coming in. We will come in. You can either register at a kiosk or register on your phone. We will navigate you to the fracture clinic where you will see your name on a board and tell you where you are in your queue when it's time to get your appointment and which room you will go to without checking in. You can check in through your phone. You will go through to your fracture clinic. You will get your procedure. Your procedure will be completed, and your next step in your next appointment will be booked for your next appointment. So we run the entire process, and that's how they do it in the UK. We're not doing it in Canada yet, but that's the solution that we offer in the UK. We're bringing that to Canada. Next question.
Our next question asks or states, you recently secured a $10 million debt funding, mentioning it might be used for a transformative acquisition. Will such a transaction be a priority in 2022?
A transforming acquisition is a priority for 2022, but not to the extent that we're going to put the company upside down and backwards. We would like to do one. We think it's something we have in the works. You never know with these things to go do that, but we are getting to the size where we think we can start working on the bigger acquisitions to do some strategic things, and we would like to do that.
Our final question asks, is telemedicine a potential growth area for VitalHub?
We are, my view, and again, I got 25 years of healthcare IT software experience, and when telemedicine was first introduced, the whole world got extremely excited about it, and I was somewhat excited about it because it got used, but telemedicine has already been in effect in healthcare before the pandemic, and yeah, it got more enhanced through that, but a lot of our solutions prior to the pandemic already had telemedicine, virtual care already elements into it, and we've integrated with other telemedicine-based stuff. So it is a growth area to some degree in how it might enhance the expansion of telemedicine, but we have that in our offerings. Again, patient journey is very element with telemedicine, so virtual care and those type of things is a big component of that. So we are in telemedicine, and we're there and we'll always be there, and it's a big part of what's already been in our solutions and will always will be.
Excellent. Thank you, Dan. That's all for questions that we have today.
Thank you, operator. Again, I'm always available if anyone has any questions. Not really sure, the people that are there, but if there are any more questions and people want to reach me, it's dan.matlow@vitalhub.com. Always feel free to reach out to me, and we'd be happy to answer any questions. And we look forward to keep updating you as we go down our journey. Thanks, everybody.
That concludes today's presentation, and thank you for tuning in.
Bye-bye.